Kunal is here with us in the studios. Kunal, hi, morning. Today seems like a good leg up we're going to get from the global cues.
Yeah, good leg up. The event also I think is behind, so I think that should also suit the market conditions at least on a short-term basis. And no complaints over the last 3 days because we've seen a classical texture of the market, sectors moving up higher, stocks showing signs of strength, leadership coming back into individual spaces, whether it's metals, whether it's banking stocks, NBFCs, etc. So I think it's been a classical mix over here. The first retest now, which we are looking out for on a technical basis, is at psychological mark of 23,000 mark. And generally, we've seen that whenever the indices come back after a recovery phase, there are certain resistance point, which gets developed on the index charts. So there are two important points over here. One is at the psychological 23,000 mark, and the second is the 50-day moving average. The reason why this is important is because over the last 6 months, there have been two attempts for the indices to try and come closer to the 50 DMA. We've closed about this level for a day or so, but then post that we've actually seen the indices go into a corrective phase. So if this time around we just hold on to that 50-day moving average and the 23,000 mark, I think we could be looking at a substantial change of trend for the index. So the next couple of days is very crucial in that sense.
Naresh is here with us. Naresh, hi, good morning. Good strength, of course, for the Nifty is what the implied open already indicates. But what about the broader markets, considering the breadth as well has been holding up very nicely for the past 3 trading sessions?
So the good part has been the recovery in the broader markets. Say the Nifty has recovered by 4-5%. The mid-cap index has recovered by 5 to 7%. The small-cap indices have recovered 8 to 10% from the bottoms. The lows we touched in January, closer to that 22,800 mark, which was holding on the Nifty. That is where the recovery is back. So the whole correction, which went beyond the January lows, has been recovered. And now we watch out for the next price points. So the next price point is the trendline resistances on 23,200 on the Nifty, and the previous interim high around 23,800. These are the two price points to watch out for. Overall, good recovery across the board. We could expect it to continue at least towards 23,200 in the next few sessions.
Right, so that's the take coming in on markets.
If you like this video, then like, share and subscribe to ET Now.